so once you start making a bunch of money from your business, you want to start figuring out like, what do I do with this money in order to build wealth for the future, but also to avoid tax. And one of the things that gets thrown around a lot um, is real estate investing. And what a lot of contractors just don't understand, right, is that losing money in real estate is not a good thing, right? You don't want to lose money. Losing money is bad. Whether you don't pay tax on money you lost because it's not income, but also not making money isn't good. And so the advantage to investing in real estate, typically as it's sold, right, is that your business makes money, the real estate loses money, and so that is your income. So that is a good thing if it's possible, right? And so what people don't understand is that real estate losses are typically not allowed to offset your business income because it's considered a passive activity. And passive activities can only offset passive income. Your business is obviously an active income. But the way around this is to become a real estate professional from the IRS standpoints. And the qualifications of this are pretty simple. You have to materially participate in a real property trader business for more than 750 hours. There's some other qualifications on that too. But the point is that you have to be someone who develops, redevelops, constructs, or reconstructs, acquires, converts, et cetera, et cetera, et cetera, et cetera. If you're in the trades, you're constructing on homes every single day. And so this formula as a real estate professional works. Again, losing money is bad, but a lot of the expenses of owning real estate are not actual cash expenses, right? So depreciation is the big one. And so if you are wanting to build wealth for the long term, and you can find houses or property, right, that need what you need. If you're an HVAC guy, it needs duct work. Maybe it needs, maybe it's got like old oil heating, or it has like electric floorboards heating, right, that you can replace. Or maybe like all the wiring has been stripped out of it. So as an electrician, you can go in there and rewire it. If you can find properties like that, right, add value to the property through the skill that you already know, you can keep your guys busy. If there are losses, right, that can offset your income. It can make the tax lower, and then you're building wealth for the future, either by renting them out, right, or by flipping them, or some other kind of buy and hold strategy. This can work insanely well. The thing we have to keep in mind and avoid is thinking that losing money is a good thing. If we're doing these kinds of activities and we happen to take losses in 1 or 2 years, hey, we get the advantage from it if we're a real estate professional, but we're not seeking out losses in order to save on tax. We want to make money, not lose money, because the goal is to take more money.